So a certificate of deposit this is known as a CD, is a type of savings account where you're required to keep your money in for a certain period of time. Usually 3 months, 6 months, 12 months, 2 years, 5 years. I mean, they may go longer than that, but 5 years seems to be about the max. The longer you commit to keeping your money in, the higher the interest rate is that they will give you on this. Now, it doesn't mean that you cannot take the money out. You can have access to those funds, but if you do access them before the term is up, that means you will be penalized. And that penalty is usually in the form of interest that has been taken back, right? So if, let's just say you had a $10,000 CD for, let's say 12 months. And it was at 6%. So that means that for the year, you'd have about $600 in interest, right? Well, if you took it out 3 months early, so you took it out, you cashed it in, so you did this January 1st, we'll make it easy. You cashed it out September 30th. So 3 months where you were supposed to keep it in to get that $600 of interest. Well, you're not going to earn that $600 of interest. And what they're also going to do is they're going to penalize you for the last 3 months of interest. So you'll have, let's see, this would be what? So you get out 10,400, something like that. Did I get that right? No. 10,450 or something like that. And then they would take back $300, 3 months worth of interest. No, $150. So you'll get back $10,300, even though you kept it in for those 9 months. But they penalized you. This is your penalty, which essentially is they're taking back the interest that they paid you. Well, that interest was included in here, and it's going to be reported to you as income on the 1099. So in order to equalize that out, you get a deduction for this penalty that you paid. So that's the penalty on early withdrawal of interest. I might have my math wrong, but I think it's roughly, it's like $50 a month. That was 9 months, okay. So the penalty on early withdrawal of interest is also an adjustment to gross income. Here we go. And it is reported on the 1099. So in the same spot that so in this case, we would have $450 of interest reported here, and then we would have an early withdrawal penalty of $150 reported here. This is income that is taxed. This is a deduction, an adjustment to our adjusted gross income, okay? That one's pretty easy. That's all there is to it. So if you see, I think you may have some problems that have an early withdrawal penalty. Don't overlook it, okay? Because that is a... So here's an example. Oh, they did it October. Well, okay. So Kanye and Kim deposited $10,000 into a 1-year CD, earning 2% interest. That's the difference. Ours is 6%. Theirs is 2%. If they withdrew their money prior to the end of the term, they would forfeit 1 month's interest as a penalty. Now, those terms would be determined by the bank, what your penalty is. On October 1st, they withdrew their money. They would report $133 of interest income, and they would also report a 4 AGI deduction of $17, so that's the penalty, 1 month of interest that they had to give back on line 18 as a penalty on the early withdrawal of savings. Okay? But those amounts are, you would never as an accountant, unless you're working for a bank, which is possible, but as an accountant doing taxes, you'd never have to calculate what that is. It's given to you on the 1099. Okay? That's not to say some of your homework problems wouldn't make you calculate it. I don't know. All right. Questions? That one's easy, right?